Unfair trade practices listed here are insider trading, investor education, grievance sell, and stock interest. What is insider trading? It takes place when insiders or any person who, by virtue of their position in office, have access to unpublished, price sensitive information relating to the affairs of the company. Now, here, insider trading, as we have discussed earlier, people or persons in positions, that is, high position in the company, will have access to the unpublished data. Now, for an example, just recently, couple of years back, we had the State Bank of India merging with all of its associates, correct? State Bank of Hyderabad or Travancore, etc. Right? With all of its associations, it was being merged with, correct? So this information, before it was public or before the public or media was aware of it, if the key people of SBI, okay, would knew this information, right? One or two people, it's a price sensitive information being leaked to their family or friends, and they will ask all of them to buy the other banks, that is the associate banks share or stocks to be purchased. Okay, so here the merger information is not public, but the person who knows about this information has leaked the information to his family or close friends. So these set of people will start purchasing the stocks or equity shares of the associate banks, or let's say companies. Okay, now automatically, once the news becomes public, share prices raise up, who is benefited? These people who have purchased the shares much before the news was out in the media. This is called as insider trading, leaking out the information which is not yet public. Okay, that is called as insider trading. So a person who is accessible to the private or a very confidential information of the company is leaking out for the purpose of what? For trading or to make some personal gain. Is that clear? We know once all these banks are going to unite or merge, definitely it's going to be more profitable and the share prices are going to increase. So when you're buying now when the share prices are low, knowing the information that for sure in the coming months all these banks are going to merge, and then when they're merged and then the prices increase because of the performance, then I can sell my share. Understand? So this prior knowledge or leaking of information for personal gain is called as insider trading. What does SEBI take action upon this? It regulates insider trading by imposing penalty up to rupees 5 lakh for those who indulge in insider trading. So if it has been proved or caught that so and so person of a higher authority has tried to use companies' confidential information for personal gain, if they find out, then SEBI is going to levy a penalty or a charge upon such person of rupees 5 lakh. Understood? That's the first unfair trade practice mentioned here, insider trading. So the second step SEBI takes is to educate the investor, right? Commonly called as investor education. It has issued few investor guidance, advertisements, and published a book on investor grievances, rights, and remedies. So SEBI has ensured that advertisements are fair and do not contain statements to mislead the investor. So often we see ads or advertisement on newspapers or magazines or TV, radio, etc. Few of the companies which give a very high promises, right? Rewards or prizes or share prizes. You invest with us so much, we will give back 200% of it back to you, right? All these advertisements must be real, right? If it's going to mislead or if it's just going to attract people. Now, if you're going to tell, you give me 100 rupees, I'll give you back 500 rupees, right? If anybody is going to make the statement, of course people are going to get attracted and start depositing rupees 100. And that person who is going to make that statement might collect from you rupees 100. Likewise, he might collect from another 1,000 people and then abscond. Correct? How is it possible investing 100 and getting back 500 without doing anything? Right? So these are called as misleading statements or false advertisements or false representation. Okay, now we have often found people posing themselves as police officers or income tax officers, and have gone to big people's houses and being raid the houses and take the documents or cash or gold and then abandon them. Correct? Whereas, was it legal? No, they have misled the people. Likewise, even in stock market, if you as a company are going public, want to invite or borrow money from the public, do not give fake promises or do not advertise your company in a fake manner. Okay, so making sure the SEBI puts all its efforts in order to educate the investor. If you are not aware of a fake company or how to identify a genuine company, you will fall for every other advertisement, correct, or every other promises, because you're getting attracted by the returns. Therefore, SEBI makes sure that you as an investor, before you invest, please be aware of such fraudulent activities around you. So, SEBI always issues guidelines or advertisements or publishes books on investor grievances, because in the past, yes, people have been faced such grievances. So, therefore, please be aware or please educate yourself about the investment schemes. Grievance cell. So SEBI, in order to make sure that the grievances, or in case there is an investor who has appointed a stockbroker, given him the money, okay, and please invest and give me so and so return. If the stockbroker is not reporting, or if the stockbroker is showing a fake license, okay, and then the investor has got to know about it, where will the investor go and complain? So that is why SEBI has opened a grievance cell. So any investor or a company having an issue, right, or facing any kind of fraudulent activities they come across with the stockbroker or with the company that they've invested, etc., right, they can always approach this grievance cell, where the SEBI collects all these complaints or collects all these grievances and deals with them individually on a serious note. Because if one investor or is being cheated of their money or investment, automatically the public interest in stock market will day by day reduce. Therefore, to avoid all this, SEBI wants to take serious regulations or serious action upon such grievances or complaints that is faced by the investors. So we have often seen, right, there are so many companies, like especially with the concept of mutual funds or chit funds that come up. Their advertisements are great, and the way they even have a professional website, everything looks so real and so genuine, right, and people are attracted and people start investing, but at the end they get to know that it's a fake company, right. They all use government symbols or government organizations symbols, or their names, and then they cheat people, right. So it is so much important for us to be aware and also to report if we face any such complaints or issues immediately to the SEBI. Next one is stock interest. It was designed by SEBI in consultation with RBI and banks as an additional facility to make application for new issues. Now here, since we have a demat account or a cash account or a margin account open, if you want to trade in the stock market, now this is a concept that is introduced by the SEBI in consultation with the Reserve Bank of India, where banks have this facility of making an application for new issues. Now, in case you have money in your demat account or in the account where you want to trade. It allows investor account to get debited only on the allotment of shares. Now, if you have studied your accounts, right, or have you studied about the allotment of shares, subscription of shares, etc., correct? Now, shares will be allotted only when your amount of money is matching up with the amount of shares in the company. Is that clear? So unless and until, even though you have applied for purchasing of securities, but your shares have not been allotted yet, the money will still remain in your account. So till then, the investor fund remains in his account and continues to earn interest. So this is an initiative by SEBI in case the shares have still not been allotted and the money is lying in your account. The bank or SEBI, with consultation with RBI, has ensured that the amount of money that is left until the allotment of shares will earn some percentage of interest. That means your money is not lying waste over there or lying idle over there, but at least you are earning some kind of minimum return upon that money in the account. Is that clear? So these are the various steps taken as to how to prohibit or control people or investors from unfair trade practices. Is that clear to all of you? We have looked at 4: insider trading, investor education, grievance sell, stock interest.